Hi, everyone, and welcome to MAGNiTT's FinTech and EVMs webinar. As you might have noticed, we've already published earlier this week a report that covers FinTech and emerging venture markets with a deep dive into the MENA region. To kickstart this, let's just have a global overview on what happened in FinTech across the international market. So starting with a global picture, in 2024, the FinTech world continued its downward trend that started in 2022. Global funding during 2024 dropped by 20% year on year to $33.7 billion. And deal activity also slowed down, falling by 17% year on year to just a little above the 3,500 mark. This was actually, on a more positive note, the smallest decline the FinTech industry has seen in the past 3 years. So between 2022 and 2024, we were seeing consecutive declines of FinTech funding and deals across the globe. However, 2024 has seen the smallest decline of them all. This comes along multiple things that happened globally across the venture capital market, which are ideally broader investor caution, higher interest rates, tighter funding environment that happened between 2023 and 2024. Globally, the US held the top spot, capturing 49% of the total capital deployed in FinTech. UK came following that with 11% only. And while the mega deal funding in FinTech declined in terms of the value of mega deal funding, investors were held strong in terms of the early stage investment that we've seen in FinTech at early stage. As for the subsectors, and similar to what we're going to see in both emerging venture markets and the MENA region, payment solutions were the top performing in terms of the value of funding. Payment solutions contributed by $6.7 billion in terms of the total FinTech funding in 2024, followed by digital lending and insurtech, which both captured also above $4 billion. Interestingly, one of the subsectors that have seen an improvement, so ideally most of the FinTech subsectors globally saw either a stability or a decline. One interesting subsector saw an increase last year, which was banking. Banking saw a 52% year-on-year increase in terms of capital deployed in 2024. Sorry. What happened in FinTech across emerging venture markets? Tuning into emerging venture markets, 2024 marked the second straight year of decline of FinTech in emerging venture markets, dropping by 8% year on year. As we can see on the chart, the main driver of this decline was non-mega funding. So this was driven by mostly a 19% drop in non-mega funding. Bright spot opposite to what we were seeing ideally across the board of the venture capital space, the mega deal front. EVM saw a strong activity at the level of mega deals. Mega deal funding improved by 4% year on year, largely driven by activity from Southeast Asia, because Southeast Asia during 2024 saw a 44% year on year increase in FinTech funding alone. Sorry. All of the top FinTech deals, all of the top 10 FinTech deals that were reported by MAGNiTT during 2024 were 100 million plus, and 8 of those were coming from Southeast Asia. Together, those deals made up 53% of the total funding. So the top 10 deals made 53% of the total funding, up from 48% the year before. So we're seeing a more increased concentration in terms of the deals. Southeast Asia, as I mentioned earlier, was home to 8 of those 10 deals. 2 of those were also coming from Africa. However, the Middle East had no mega deals closed during 2024 at the level of FinTech. More negative side of the story is a bit at the level of the deals. Overall deal count fell by 18%. We saw a sharp 31% year-on-year dip in both pre-seed and seed deals. This is signaling a tighter capital at the early stage across the emerging venture markets in FinTech. Zooming into the countries, let's look on where the big deals happened. Ideally, top 5 countries, which are Singapore, Philippines, Egypt, Nigeria, and Thailand, were all homes for 100 million plus deals during 2024. Singapore dominated, ideally being on top. It was dominant with 6 of those top 10 deals, all over 100 million. In total, Singapore alone captured 36% of the total emerging venture market fintech funding during 2024. Another standout that happened during 2024 was the Philippines. The Philippines jumped up 13 ranks thanks to a single deal by Mint, which was $786 million, and a massive 8-fold increase as well in terms of the non-mega funding, signaling 2 things: depth and breadth in its rapidly evolving fintech ecosystem. At the level of deals, the story was not too different. However, Singapore continued to lead the EVMs and Southeast Asia. However, in Southeast Asia specifically, the region is becoming more diversified. We're seeing activity in the Philippines, we're seeing more activity in Indonesia, which are gaining ground in the fintech industry as recently developed fintech hubs. In MENA, stars are usually UAE, KSA, and Egypt. They continue to assert their dominance as the most transacted fintech hubs. However, the contribution of all 3 together was 30% of all fintech deals across emerging venture markets. This was supported ideally by strong regulatory frameworks, government backing, and active local VCs, in addition to sandboxes and multiple initiatives and funds that are focusing on fintech specifically. Digging deeper into where in fintech the activity was concentrated, we look at payment solutions. The longer I follow up on fintech, I see payment solutions gaining further and further interest. This does not mean that there is no diversified activity across the fintech industry. However, payment solutions tends to be the most active in terms of both deals and funding across most of the regions of coverage and EVM overall. Payment solutions alone accounted for $2.2 billion, which is 56% of total fintech funding in 2024. Leadership was driven by ideally bigger rounds like Time, Send Money, and GXS Bank, which were 3 of the top 5 biggest deals across emerging venture markets during 2024. One other interesting thing that we've seen across emerging venture markets overall, and we're going to see more of it across MENA and Southeast Asia, is cryptocurrency. Crypto funding nearly doubled, up 96%, and this is showing ideally renewed investor confidence and growing momentum towards this digital and financial transformation. At the level of deals, the story is not different much. Payment solutions also led with 97 transactions, 10% lower from what we've seen last year, however, capturing 30% of all fintech activity in emerging venture markets. Again, if we're looking here, we can see that crypto stood out. So deals in crypto expanded 53% year on year to reach 46, making it the 3rd most active sub-industry across fintech in emerging venture markets. So this again comes to signal that the investor appetite is returning into crypto. We've seen a reduced appetite into crypto in 2023. We're seeing a comeback into the sub-industry in 2024, especially with more regulated digital assets playing their role. Star of the show, MENA Spotlight. The report has a MENA deep dive with more detailed analysis across MENA markets and specifically all the countries that are covered, with a more detailed analysis of each of the sub-industries and the countries, in addition to investors and exits as well. If we're focusing now on MENA, we can see that over the past 5 years, in total, fintech has contributed to 30% of MENA's total funding and 19% of the region's total deals. Ideally, fintech is the biggest contributor to the MENA market over the past 5 years. During 2024, we've seen fintech funding in the region drop by 50% year on year, driven by mostly, as we can see on the chart, an 81% retreat in mega deal funding. During 2023, we've seen 3 large deals which were 340 million by Tamara, 250 million by Tabi, and 260 million by Halan. 2024 reported a single mega round for FinTech, which was 158 million by Halan. This drop was the main reason behind the decline in FinTech funding during 2024. However, while funding dropped from around 1.3 billion in 2023 to 644 million, there was a positive twist, which was the number of deals. The number of deals in FinTech increased from 111 in 2023 to 124 in 2024, which is a 12% year-on-year rise. So while bigger checks are slowing down, smaller rounds are picking up. Investments under the $100 million increased from 424 million in 2023 to 486 million in 2024. So this emphasizes that early stage plus bit of the Series A rounds are becoming more active in FinTech. We're becoming actually more active in FinTech during 2024. This is signaling a shift in investor strategy, more diversification, more early stage bets, and a strategic pullback from late stage commitments during 2024. This does not necessarily need to be the case in 2025. In 2025, there was as I'm gonna mention over this slide, 2025 saw a bit of a more positive performance into FinTech. If we're fast forwarding into Q1 of 2025, we started the year strong for the industry. FinTech funding during 2025 is now up by 362% year-on-year during Q1 alone, thanks to a single deal by single $160 million deal by Tabi. Narrowing down into non-mega deal funding in FinTech in the MENA market also saw a double-digit increase during the first quarter. So while quarterly trends in 2024 told a similar story of a bit of a slowdown, a sharp dip of 20 to 22 deals in Q2, and then a rebound to 35 deals in Q4, while funding was very low during Q1 before it doubled up into 157 million in Q4 2024. Q1 2025 came to create a certain shift into a more positive performance for the FinTech industry. Looking at the countries, as I've mentioned earlier, the top 3 FinTech hubs across the MENA market were Egypt, Saudi Arabia, and the UAE. All 3 together during 2024 collectively made up 96% of MENA's FinTech funding, with regulatory bodies like SAMA, CMA, ADGM, DFSA playing a critical role in enabling FinTech innovation and capital formation, in addition to the sandboxes that we are seeing that are activating the role of FinTech in the region. Egypt led by 241 million, as we've mentioned earlier, powered by 158 million by Halan. The UAE held steady with 186 million, reinforcing its place as a regulatory and innovation hub. Meanwhile, Saudi Arabia also came into the second position with $191 million after a very strong 2023 for FinTech post the Tamara and Tabi rounds. So if we're looking at the changes, the 72% drop in Saudi Arabia was mostly driven by the absence of mega deals in the FinTech industry during 2024. In terms of deal volume, UAE did maintain its lead during 2024 across the FinTech industry with a 10% year-on-year increase, driven by a strong infrastructure, favorable regulatory landscape, and a vibrant startup scene at the level of FinTech. We see a lot of the cryptocurrency activity happening across the board of the UAE-based startups. Saudi Arabia did hold its strong position as second most active market, despite the 8% year-on-year drop in deal volume, showing it remains key for investors across the markets. And all this comes against the backdrop of, again, supportive policies, licensing frameworks, sandbox environments, which are key growth enablers. We also saw an exciting momentum across smaller markets. So Qatar's deal tripled, Jordan's deal counts rose by 67%. These are small base numbers. However, the pace that they're growing at is very promising for the industry. If we drop it down into the sub-industries across the MENA market, at the subsector front, we saw that payment solutions still led in funding, despite a 74% year-on-year drop due to fewer mega deals. In 2023, payment solutions reported an all-time high share for FinTech funding with 60% of the total funding. In 2024, if we're looking at other sub-industries, we see that banking infrastructure rose to $99 million, a 163% increase, as investors shifted focus towards B2B and enablement layers. Crypto, again, as I mentioned earlier, did have a certain level of gains, rising by 80% to $36 million in 2024, while lending staged a bit of a comeback, likely fueled by consumer demand for credit innovation in the region. At the level of deals, payment solutions also dominated on the deal side, accounting for more transactions than all other 4 sub-industries combined. So, complementing the funding trends, deal activity across MENA sub-industries in 2024 further reinforced a concentration in investor preferences at the level of payment solutions. Payment solutions not only led in funding, but also topped in deal volume with 42 deals, up by 68%. So this translates into the fact that despite the drop in late-stage funding that we've seen at the level of funding early in the previous slide, we've seen that there was an increased activity at the level of earlier staged or smaller sized deals in terms of payment solutions, which was backing up the 68% rise in year on year in terms of the number of deals. Lending and crypto were also gaining traction amid shifting preferences toward credit and blockchain innovation. One very interesting aspect to look at this from is investors. So between 2020 and 2024, the MENA FinTech landscape witnessed a significant shift in investor dynamics. Proportion of international investors rose from 27% during 2020 to 53% during 2024, underscoring the region's growing appeal as a global innovation hub. This diversification definitely confirms that MENA is no longer solely dependent on regional funding. After a 25% year-on-year drop in terms of the number of investors between 2023 and 2022, investors in the sector rebounded and came back with a 21% year-on-year increase in 2024, reflecting the renewed confidence and interest in the sector, a similar performance to what we've seen in terms of the number of investors at the level of the overall MENA region, which saw a 20% year-on-year increase during 2024. 9 of the top investors in FinTech at the level of the number of deals were from the region. However, at the level of capital deployment, the pool of investors was a bit more diverse. We've seen significant contributions from investors in Hong Kong, Singapore, the USA, and the UK across the board of the top 10 investors in FinTech in the MENA region during 2024. So again, this highlights the strategic importance of the MENA region as a FinTech hub. Following the MENA region, a brief overview on where the African market stood at the level of FinTech. So ideally, FinTech does play a pivotal role in Africa's economic development by addressing the long-standing challenges in financial accessibility and inclusion. So with a significant proportion of the population unbanked or underbanked, traditional banking systems are falling a bit short in reaching remote or underserved communities. So in Africa, in 2024, Africa saw a sharp decline in deals and funding of 55% and 38% respectively. However, we've seen that the era of post-COVID was really vibrant at the level of the FinTech industry across Africa, reaching nearly $2 billion during 2021. So during 2024, between 2022 and 2024, we were seeing declines at the level of funding and deals in Africa. However, the decline in Africa was similar to the decline we've seen across the emerging venture markets overall, this was driven by a decline in non-mega funding, which was 67% last year. So funding in Africa was driven by smaller sized, the decline in funding in Africa was driven by smaller sized deals, while mega rounds in Africa did see an increase of 42% year on year last year. This was driven ideally by three mega rounds that we've seen in Africa by Move Africa, MoneyPoint, and Halan. At the level of countries in 2024, Egypt and Nigeria solidified their positions as Africa's leading fintech hubs, propelled by the transactions I've mentioned earlier, which were 158 million by Halan and 110 by Nigeria's MoneyPoint, and another $100 million by Nigeria's Move Africa. MoneyPoint's investment included backing from Google Africa's investment fund, ideally underscoring Nigeria's robust fintech landscape. Meanwhile, Halan's funding was also backed by the international IFC, which invested in that round. In contrast, South Africa, which had a solid position the year before, experienced a notable downturn. So despite deal activity, South Africa saw a steep 91% year-on-year decline in terms of funding, dropping down to 5th place across the African ranking in terms of fintech funding. At the level of sub-industries, as I mentioned earlier during the presentation, payment solutions are the leading segment across most of the markets. We're going to see a slight difference in Southeast Asia. However, mirroring overall performance, payment solutions emerged as the leading segment in Africa's fintech landscape, again accounting for 36% of total fintech funding and 36% of total fintech deals, respectively. So this dominance is driven by several key factors. First of all, the continent's rapid mobile phone penetration, significant unbanked population, increasing need for efficient cross-border trade mechanisms. Mobile money platforms have revolutionized financial access, allowing this to be a growing sub-industry in Africa. Moving into Southeast Asia, which was the biggest contributor to fintech funding and deals across the emerging venture markets during 2024, Southeast Asia was the only region across emerging venture markets to see an increase in both deals and funding. MENA did see an increase in deals, however, it saw a decline in funding. Southeast Asia saw an increase in both deals and funding, driven primarily by a 44% rise in the mega rounds. So following the slowdown the industry saw during 2023, fintech funding in Southeast Asia in 2024 rebounded with a 20% year-on-year increase, driven primarily by a 44% rise in mega rounds, again signaling a renewed investor confidence in the industry across the region. Deal volumes, on the other hand, also increased by 12%, reflecting a broader market recovery and growing appetite across different funding stages, although we saw a bit of a tip down across non-mega rounds, which were relatively flattish at around $1 billion between 2023 and 2024. The level of countries, similar to what I mentioned earlier during the presentation, whereby Singapore dominated emerging venture markets overall, Singapore maintained its position as Southeast Asia's leading fintech hub, securing around $1.5 billion in fintech funding, only 2% lower than its level in the previous year. Conversely, the Philippines, which was not across the top 5 or even 10 across the board, did demonstrate a remarkable growth in the fintech sector. Again, the standout example is Mint. The rise underscores the Philippines' rapidly expanding fintech ecosystem, driven by high mobile and internet penetration rates and a growing demand for digital financial services. Together, Singapore and the Philippines accounted for 84% of Southeast Asia's total fintech funding in 2024, highlighting the pivotal roles the two countries are playing in shaping the region's financial technology landscape during 2024 and upcoming. Again, the only outlier, as I mentioned earlier, was crypto in Southeast Asia. Southeast Asia's fintech landscape did undergo a dynamic shift between 2023 and 2024, maintaining a bit of a clear divergence between deal activity and funding levels. Cryptocurrency across Southeast Asia emerged as a standout sub-industry, leading in deal volume with a 127% increase, climbing up 2 ranks, yet a substantial 145% in funding maintained it at only the 5th rank across the top 5 most funded sub-industries in FinTech. This brings the presentation to an end. I hope that was beneficial. I'm gonna be opening the floor for questions. Let me stop sharing. All right. Okay, so thank you for the question. How has investor appetite for fintech evolved over the past year, especially in light of macroeconomic headwinds? So, as I mentioned earlier, fintech was no different, at least across the MENA region, from what we've seen in terms of the overall performance. We did see a decline in terms of funding at the level of late stage, similar to what we've seen across the board of the MENA region overall and its countries. However, as I mentioned earlier, moving into 2024, 2025, the appetite towards fintech was a bit improved. We've seen a 40% year-on-year increase in terms of the value of fintech funding year-on-year, which is non-mega funding. And we've also seen an increase in terms of the mega funding, which was absent during the first quarter of 2024. However, we've seen a single deal closed for the fintech industry during 2025. All right, thank you for the question. Are we seeing more early stage bets or late stage consolidation plays in fintech right now? What does this say about where the market is heading? So fintech is seeing activity at both levels. If we're looking at where the breakdown is coming from currently, we can see that in the MENA region specifically, we are seeing activity concentrated mostly, if we're looking at that, between the 1 million to 5 million rounds. So ideally, around half the deals that are getting closed in terms of fintech at the moment are at half of the deals, half of the 124, where between the 1 million to 5 million. We're seeing a stable activity at the 5 million plus. However, we're seeing a decreased activity at the 0 to 1 million level. All right. Which emerging markets do you think are ripe for fintech investment and why? As I mentioned earlier, there is a concentrated activity across specific markets in Southeast Asia. As I mentioned, if I want to group them by region, definitely the UAE and Saudi Arabia across the Middle East are the most ripe, given all government initiatives and the support they're getting from multiple events, multiple fund announcements that are focusing on the industry. We see events like the IFC summit that happened earlier this week that are always there to support the promotion of the industry. One. Two, across Africa and the need for fintech in Africa, we do see markets like Egypt and Nigeria and South Africa, which although did not see much interest during 2024, is a very ripe and active market in terms of the fintech sub-industry in Africa. And definitely in Southeast Asia, a 1.5 billion for Singapore is enough to tell the story of how much concentration is seen across fintech in Singapore. And as I mentioned earlier, the eightfold increase at the level of early stage investments or non-mega deal investments actually in the Philippines, plus a 786 million, which is relatively a large sized mega deal, make the countries ripe markets for fintech across the regions. All right. Any other questions? What are the key observed challenge patterns for fintech startups in the Middle East, and where are the main trends heading? Okay, thank you for the question. Key observed challenges in the Middle East are mostly regulatory. So it depends on how flexible the regulations are, which are the biggest challenge ideally for fintech in the market. However, the market in the Middle East is relatively continuously growing. At least over the past 5 years, we've seen continued growth for the market in the Middle East. Where are the main trends heading? If by the main trends we mean where are they heading in terms of the stages? As I mentioned earlier, we're seeing an increased interest in 1 million to 5 million, which is relatively somewhere between seed and pre-series A. In terms of where we're seeing the interest at the level of countries, it's definitely the top 3 niche markets are there and they're vibrant, but we're also seeing an increased interest in smaller markets like the markets in Jordan and the market in Qatar. And if we're looking at sub-industries, while payment solutions remains the most active sub-industry, the region is seeing vibrant activity at the level of cryptocurrency, banking infrastructure, lending, and neobanking as well. Any other questions? All right. Thank you so much, everyone, for joining. Our upcoming webinar is on AI during June. So we're looking forward to that. Please share with us any questions you might have on the topic as well. Happy to support with those. And let us know if there's anything you would wish to learn more about. Thank you.